In today's video, we're going to explore one of the most significant economic crises of the late 20th century, the Asian financial crisis of 1997. This crisis shook the economies of several countries in East and Southeast Asia, causing widespread financial turmoil. What triggered the crisis? What were the consequences? And how did it change the economic landscape of Asia? Let's dive in. The economic boom before the crisis hit, many Asian countries were experiencing remarkable economic growth. Throughout the 1990s, countries like Thailand, South Korea, Indonesia, and Malaysia had been referred to as the Asian Tigers, nations that achieved rapid industrialization, impressive economic growth, and rising living standards. Foreign investment poured into the region, and stock markets were soaring. However, this economic boom masked some serious structural weaknesses and vulnerabilities that would soon be exposed. The role of foreign debt and currency pegging. One key factor that contributed to the crisis was the over-reliance on foreign debt. Many Asian countries borrowed heavily from foreign banks and investors to finance their rapid growth. But this borrowing came with risks. Much of it was short-term debt, meaning it had to be repaid quickly, often in US dollars. At the same time, many of these countries pegged their currencies to the US dollar, meaning their currency values were fixed to the dollar at an artificial exchange rate. This strategy worked well while their economies were growing, but it left these countries vulnerable when economic conditions began to change. The first signs of trouble, Thailand and the Thai baht. The crisis began in Thailand in July 1997, when the country's currency, the Thai baht, came under attack. Thailand had been running large trade deficits and relied heavily on foreign capital to finance its growth. As investors began to fear that the Thai economy was overheating and unsustainable, they started pulling their investments out of the country, triggering a massive devaluation of the baht. The government tried to defend the currency by using its foreign reserves, but it was a losing battle. In July 1997, Thailand was forced to float the baht, which led to its sharp devaluation and the beginning of the crisis. The spread of the crisis to other countries. Once the crisis hit Thailand, it quickly spread to other countries in the region. Investors, spooked by the baht's collapse, began pulling their money out of other Asian markets. South Korea, Indonesia, Malaysia, and the Philippines were all impacted by the rapid outflow of foreign capital. Currencies in these countries also began to lose value, and stock markets plunged. Governments and central banks in these nations struggled to defend their currencies, and inflation surged as the value of local currencies dropped. But that wasn't all. These countries also faced banking crises as many of their banks had taken on large amounts of foreign debt, which they couldn't repay as their currencies devalued. The international response and IMF intervention. As the crisis deepened, the International Monetary Fund, IMF, stepped in to provide emergency financial assistance. The IMF offered bailout packages to the hardest-hit countries, including Thailand, South Korea, and Indonesia, but in exchange, they had to implement strict austerity measures. These measures included cutting government spending, raising interest rates, and reducing budget deficits, policies that were deeply unpopular and led to protests and social unrest. In South Korea, for example, the government had to agree to sweeping economic reforms, including restructuring its banking system and corporate sector. Script 7. The impact on the people and societies. The human toll of the Asian financial crisis was devastating. Millions of people across the region lost their jobs as businesses shut down or scaled back operations. Inflation soared, and everyday items became unaffordable for many families. In Indonesia, the crisis led to political instability, with President Suharto eventually being forced to resign after years of rule. Protests and riots broke out in several countries, as people blamed their governments for mishandling the economy and failing to prevent the crisis. The long-term consequences. Despite the immediate pain, the Asian financial crisis did eventually lead to long-term changes in the region. Countries that were hit hard by the crisis, like South Korea and Indonesia, made significant reforms to their financial systems and economies. The International Monetary Fund played a controversial but crucial role in helping these countries recover, although the austerity measures it imposed were widely criticized. In the years following the crisis, many Asian economies rebounded, but the events of 1997-1998 served as a sobering reminder of the risks of excessive borrowing, currency pegs, and lack of financial oversight. Key lessons from the crisis. So, what lessons can we learn from the Asian financial crisis? First, it's clear that countries must be careful about relying too heavily on foreign debt, especially short-term loans that can quickly become unsustainable. Second, pegging currencies to the US dollar may seem like a good strategy in times of growth, but it can be a dangerous gamble when external economic conditions change. Lastly, the crisis highlighted the importance of sound financial regulation, transparent banking systems, and government accountability. Many countries in the region have since implemented reforms to ensure that they are better prepared for any future economic turbulence. The Asian financial crisis of 1997 remains one of the most impactful events in the history of global finance. It reshaped the economic landscape of Asia, leaving a legacy of reform, greater caution, and lessons learned. What do you think? How do you believe the region has changed since the crisis? Let us know in the comments below. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon to stay updated on future videos. Thanks for watching, and we'll see you in the next video.